Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get straight to the headlines. It's a decent start for the Indian markets this week, with the Nifty firmly placed above the 10,350 mark.
IDFC and Shriram Capital are set to call off merger plans after the two sides failed to arrive at an acceptable valuation. That's a Bloomberg News report.
ONGC is one of the top Nifty gainers in trade today. The company's top management tells Bloomberg Quint that higher administered gas prices and volume growth will reflect in their numbers starting the current quarter.
Lupin, HDFC, UPL, Tata Steel and Bharti Infratel are the Nifty companies posting their quarterly numbers today.
Some conversations coming up on the show today. We talked to a mutual fund manager. Did the mutual fund industry miss out on the opportunity to invest in public sector banks before the recapitalization plan was announced? And Hans Goti joins us with a view on the global markets. Oil prices starting to move higher. At what point do they become a worry for the broader markets?
Well, let's start with how the week has kicked off for the markets. It's looking good at the index and the broader markets as well. Neeraj is taking a closer look at some of those stocks. How's it looking, Neeraj?
Not bad. So volatility has moved up as well. So first a reaffirmation that today India VIX has really shot up in trade. So you've got to keep that in mind. But we're trading close to or in or around those high points of the day with the Nifty Bank as well. But yeah, oil and gas stocks are leading the chart. So be it BP, HP, be it ONGC, Reliance too had a fair tick of green at the start of the trading day. So all oil and gas names seem to be doing really well for themselves. Yes, Bank has bounced back after the results week losses, so corrected about 7.5–8%. But in today's session, a bit of a bounce back coming in for that one. And as have PSU banks. So while ITC may continue to drag, and that's the top loser percentage-wise and weightage-wise on the index, look at what PSU banks have done in the session today. Be it State Bank of India, which is up actually 3% at a point of time. Now it's cooled off a little bit. But Union Bank, IDBI Bank, clutch of these mid-sized PSU banks seem to be doing okay. And the crude price impact is not just felt on the larger ones, the mid-sized exploration names too. Ceylon Exploration, I think, at double-digit gains. HOEC posted its numbers, otherwise was also doing about 3% higher. So good going there. United Spirits results and the commentary showing on some of the other mid-sized companies as well. So large companies doing well. The other pockets are catching some fire out there. Good going all round.
Earnings have been digested fairly decently so far, isn't it?
Yeah, so today I think we just did a analysis today of what's happened. More yellow, which means more earnings in line. But we were also talking to a few people. Very few disappointments, aside of course, what Ira has spoken about at length last week, which is the divergence and thereby the market reaction on some of the large private sector banks. But otherwise, until now, you wouldn't say that this has been a disappointing quarter. It's actually been an inline to a marginally higher than estimate quarter, to be honest.
Just one chart that we're picking off the terminal today, and this is not a banking chart. This is a chart of Maruti and how that's outperformed the rest of the index. It's an interesting one to sort of demonstrate what has happened to the stock in the last 1 year. More importantly, the consensus target price is at 88.28. It's still trailing the target price, the consensus target price, and the stock has returned anywhere like in the last 52 weeks. It's returned about 40%, over 50% in the last 1 year. That's the chart. The white line is the Maruti stock. The blue line is the auto index. If you look at it from a 1 year perspective, that sort of yawning gap tells you how well the company has performed vis-a-vis competition. And I'm not even talking about the unlisted guys in the industry.
Yeah, and how brilliant were some of those guys who decided when demonetization happened that this will not be a permanent impact on Maruti. The stock corrected to 4,900 or thereabouts. From there, to get those returns, 60% on Maruti is no mean feat. But yeah, I mean, it's shown, despite the capacity constraints, the numbers were not too bad. We now have a 5-digit target from Macquarie, I think, on Maruti as well.
10,000.
10,000, yeah. So that's very, very interesting. And then we had market guests who came in and said, okay, our targets were 10,000. So it's interesting, yeah.
In retrospect, it all looks obvious.
It all looks obvious, yes.
All right, Neeraj, thanks so much for that. That's the market check. The big story, though, here on Bloomberg Quint this afternoon is that the ambitious deal between the IDFC groups and the Shriram groups may actually be called off. That's the top story on BloombergQuint.com. George Smith-Alexander, who's written on that story from Bloomberg News, is here with us in the studio. George, firstly, what are you picking up from your sources? It was a tough deal in the beginning when it was announced, and it looks like some of those issues have come to play.
Yeah, it was not a question of just a tough deal. It was also one of the most complicated deals. If you look at anything in the financial sector, for that matter, multiple companies being merged with two different companies. A lot of things going around. You needed to have shareholder approvals. So what we understand is that some of the minority shareholders of IDFC were not very enthused with the valuation, and obviously that was a tiebreaker for this deal.
It's not just about the valuation. You mentioned it's a complicated structure as well, isn't it? I mean,
Yeah, so
right
if
from
you
the
look at
word
it,
go,
yeah.
people didn't quite understand what they were trying to achieve.
Yeah, so Shriram City Union Finance was supposed to be merged into IDFC Bank. Shriram Transport Finance was supposed to be merged into IDFC. Initially, it was supposed to be delisted. Then the structure which they came out was that the delisting may not be required. So there were multiple things all over the place.
Was it Khazana and the Indian government who had specific concerns because they are the largest shareholders in IDFC Limited and also in the bank?
They and a few other shareholders too had voiced their concerns. So if you look at it, IDFC, even though the market cap is at around 100 billion rupees, the sum of, and because it's a holding company, obviously the valuation was lower. So the valuation for that was supposed to be at around 130 billion rupees. Whereas for Shriram Capital, it was supposed to be at around 250 billion rupees. Obviously, there is a yawning gap between the two valuations, and that would mean that be it the government of India, be it Khazana or any of the other smaller shareholders, all of them would then hold a very, a distinctly lower stake in the merged entity. That's something which none of these shareholders would have liked in the first place.
George, we'll leave it there. Thank you so much indeed for joining us. What does this mean for IDFC? Let's wait and watch how the story unfolds. But we're halfway through earnings, and we at Bloomberg Quint have taken a look at the second quarter and how that has panned out. Darshan is standing by with a scorecard of the numbers that have come so far. Darshan, more green than red this season, at least so far?
See, as of now, it's a season wherein, majority of them have actually met estimates. So, if you're looking at it, out of the 23, 14 are in line, 5 are strong and 4 are weak. So it's pretty much, and this will include the new companies. So Bajaj Finance is the one that's reported earnings from the new one. So that's the scene that we have till now. But what we've seen is the fact that, the number of strongs have gone down. So 2 quarters ago, 11 strong, then 9 strong. Now it's 5. Inline has always been more, but at this time from 9 to 14, and number of weak have pretty much stayed steady. So what we're seeing is that from the stronger companies, they're reporting inline set of numbers. So it's a very, very inline meet estimate type of quarter that we've seen in the 23 of the companies that have come down with numbers now. So you can see here, the number of green is pretty much individual. So auto finds mentioned there, cement finds mentioned there, media finds mentioned there. Others are pretty much ITC, the HUL, the FMCGs are in line, the entire IT pack is in line, the private banks are in line. What is weak is the private sector banks which had asset quality issues, and the oil companies find mention in weak, ONGC and IOC. Individually, let's break it down into sectors. For auto companies, there was Bajaj Auto and Maruti which came out with numbers. The growth was strong. Margin expansion was also there. You already spoke about the 10,000 targets on Maruti. So this is as far as the auto company is concerned. Cement, Ultratech came out with strong set of numbers. It's the 4th straight quarter of strong numbers for Ultratech. Ambuja was in line. ACC, not a nifty company, but one was there last time. So that did manage to outperform, the Ambuja as well as Ultratech. Now let's move on to the third sector that we have, and pretty much that can give a indication of the consumer sector. So inline set of numbers, so nothing much, no fireworks happening as far as the consumer sector is concerned. The next sector is the oil company. So after 2 strong quarters, Reliance has a muted quarter, but the strong point was Reliance was Jio turned a bit positive. IOC was weak, IOC was in line, and ONGC was rather weak. So lower GRMs were seen this time around. The next sector that we'll talk about is the banks. Inline set of numbers for Kotak, HDFC, IndusInd, ICICI, all of them were weak. For Yes Bank and Axis Bank, it was the asset quality issues that had come out. So Yes Bank, the financials were decent, but it was the asset quality that dragged down the numbers. And finally, if you're looking at the NBFCs, Bajaj Finance was in line, but Indiabulls Housing was a strong set of numbers. And the final, let's talk about the media companies. So IT companies, how can I forget? All four met estimates. Guidance was weak for all of them, so that was the big worry point that has come out. And media companies, Z is the only company in the media space that has reported, and it reported a strong set of numbers, and that was led by strong ad growth that was seen this time around.
All right, Darshan, that's the earnings that have been reported so far. We are also watching out for a whole host of important numbers, some of them coming today. Lupin, HDFC, Bharti, Infratel earnings is what we are watching for this Monday. Research team standing by. Darshan is still with us. Shraddha joins in on HDFC, and we've got View coming in on Lupin as well. Shraddha, over to you first. What's the expectation on HDFC? It should be out any time now.
Well, yes, HDFC, we should expect to see a steady trend as far as the growth and earnings numbers are concerned. So in terms of key numbers, net interest income is seen growing by about 6%. Net profit is seen growing by about 9% to 1990. Interest spreads are expected to come in at about 2.3% levels that we have been seeing for the past many quarters. Loan growth expected to come in at about 13 to 15%. And when it comes to asset quality, HDFC has the asset quality has remained healthy over the past several quarters, but do remember that in the June quarter there was a slight spike in the gross NPA number, which rose from 0.8% to 1.12% on account of a 900 crore exposure that they had to one of the IBC linked accounts under RBI's first list. So that is expected to normalize in this quarter. Even adjusting for that, the gross NPA number in the June quarter stood at 0.8% level. So those are the kind of numbers that are expected. Of course, we will be watching out for any exposure to RBI's second list. The large trends as far as the loan book growth is concerned, especially in the light of RERO and slowing housing loan growth and also the movement in spreads.
Shraddha, thank you for that. We'll wait and watch how those numbers play out. Lupin from the pharma space will be the first pharma company to be reporting earnings. Darshan is standing by to tell us what we are pricing at. Darshan, what are we looking at?
See, we are looking at a weak number this time around. We are seeing a close to 5% drop in the top line. We are seeing EBITDA margins fall to close to 21%. And as far as profit is concerned, we are seeing almost a 33% drop on the profit front. And EBITDA will also be down close to 15%. Now, basically, there are two businesses they work in, formulations and API. Both of them are expected to see a degrowth in excess of 5%. So that is weak. In terms of geographical moves, US is supposed to see a 25% degrowth that could come in. India will be close to 22% growth, 11% growth in Japan, and other markets close to 10%. Now, there is immense competition and pricing pressure in the US, and there are three key products, Ministrine, there is Fortimet and Glumetza. All of them are seeing a lot of price erosion and what are seeing a lot of price competition. So that is something that will actually impact. They've managed to launch some new products, but they aren't expected to do that well. Gavis, they haven't been able to turn around very, very well. As far as India is concerned, it's a quarter after GST. So initially in the first quarter when there was destocking, now there is restocking that will happen. So that will actually boost the numbers. But increased competition in the high margin products in the US is supposed to dent the margins for Lupin this time around.
And then there's telecom. No relief expected for the telecom sector. Average revenue per user is expected to remain under pressure, denting margins. Samit Sarkar has the details on what the expectations are there. Samit.
Now, the second quarter for telecom companies will be weak, not only because of the seasonality impact, but also because of GST, higher tax rate under GST and Jio's continued competitive pricing. Now, under GST, the tax rate was fixed at around 18% versus the 15% service tax earlier. Now, this hike in tax rate, was not, the service providers were not able to pass through this hike in service tax due to the competitive pricing that Jio brought in. Now, in the second quarter, two telecom service providers, that is Airtel and Idea, will yet again see there's average revenue per user declining for the fifth straight quarter. Now, Airtel is expected to come in with an ARPU of 146, while Idea with an ARPU of 135. Now, if you see company-wise, Bharti Airtel, that is the biggest telecom company in India, will see its consolidated net profit decline by 8% compared to the last quarter, but its African business will see a gradual recovery with growth in top line and margin expansion because of the cost control measures that the company has brought in. Idea Cellular, on the other hand, will see its financials worsen in a bit more in the second quarter. EBITDA is expected to fall by more than 20% to 1,484 crore, while it is expected to come out with a loss, but this time the loss figure will be more than 1,000 crore. Now, this could be also the fourth consecutive quarter where the company will be posting a net loss. Now, Bharti Infratel, which is the tower infrastructure company, will be coming out with its result today and is expected to post a good growth. Revenue is expected to rise 10%, EBITDA by 12%, as it will see the benefits coming in from improvement in energy spreads, while net profit on the other hand will decline by 5%. Now this is because of lower other income and higher tax expense. Now for Infratel, tenancy ads in Q2 are expected to moderate, but management outlook on the same will be a key thing to watch out for. Along with that, management commentary on share buyback plans, if any, because they have a good high cash balance on the book, and management commentary on mergers and acquisitions will be a key thing to watch out for.
All right, Sumit, thanks so much for that. Those are the numbers we are watching out for. Among the numbers that have already come in, ONGC posted a disappointing second quarter with net profit jumping only on the back of a higher other income. But the management is optimistic of growth in the coming quarters. They spoke to Bloomberg Quint earlier today explaining exactly why.
The prices increased for the next quarter. It has moved from 2.48 to 2.89 now. So that is, plus the volumes are increasing. So definitely it should look good in the coming quarter. The crude prices are looking upwards in the current quarter, October. And that should really, and if these prices remain more or less at this range, we should be definitely doing a little bit better. The deal needs to get concluded before 31st of March. And definitely before that, we would like to close it. But as of now, we are still in the process of evaluating.
That's the management of ONGC. PSU Bank saw a stellar rally last week after the government announced a 2 lakh crore recapitalization plan. Analysts expect a significant re-rating of the stock after they clean up their balance sheets. But most fund houses have had limited exposure to state-owned banks before recapitalization was announced. So have they missed the bus, or are there more opportunities in this rally? To understand this, let's welcome in Ramnath Venkateshwaran, fund manager at LIC Mutual Fund. Ramnath, thank you so much for joining us on Bloomberg Quint. Let me begin by asking you about what you've thought of the bank recap plan, and have fund houses really missed an opportunity?
Yeah, the point is that our view, which we have consistently kind of held for a period of time now, has been that banks, being a highly cyclical sector, go through these cycles of boom and bust. So you had a phenomenal rally in the GDP and in terms of driven by investment demand between 2004 to 2010. Where you had this entire thing funded by bank credit and the debt markets. And then what happened is after 2010, a lot of expectations, or what people expected the normal world to be, turned upside down, driven by both international and domestic factors. And post that, you had this RBI coming out with the AQR and trying to basically recognize the SAR assets to the extent that and bring about greater transparency to the entire banking balance sheet. And after that, since most of this loans were concentrated in the PSU banks, in this particular thing, that was where the maximum stress was there in terms of the NPL problem. And after that, you have to have this process of cleaning up and getting the capital in, so that the banks can again start the process of growing, and lay the seeds for the next set of growth to happen. Now, if you see what the government has done, they have now brought about a fair amount of, given a fair amount of clarity in terms of how this.
Sorry to interrupt, Ramnath. Sorry to interrupt. I think we're familiar with the cycle, that banks have gone through to get to this point. I think the point was that a lot of fund managers had written off PSU banks, and then came this recap, which was large in size, substantial in size, and stocks shot up on one single day, which probably, as sort of Harsha suggested, means that a lot of fund managers have lost out on the opportunity to cash in on this recapitalization rally.
Yeah, see, the thing is that, that one-day rally that you saw last week, was fairly significant. You had yearly returns kind of happen on a single day. So consequently, you are going to see a period where I think some of these stocks are going to consolidate, and then probably the next set of rally will happen. So if you are, our view is that, if you stay invested in this stock in these stocks, or at least some of the better run PSU banks, there is reasonable amount of money to be made over the next 2 to 3 years.
Hold the thought at this point, Ramnath. We just have some earnings crossing across the screen. 2,100 crores odds the net profit on HDFC. That's higher than estimates of about 20 billion rupees or 1,990 crore. That's the only number that's flashing on my screen at this point in time. The total net income on the Bloomberg is at about 87.6 billion. That's their total income for the second quarter. Net profit is coming at about 2,100 crore. The stock is marginally moving in the green at this point, about 0.5% in the green. But let's wait for some greater clarity on how the numbers have performed for this quarter for HDFC. The street was working with about a 1990 to 2,000 crore kind of net, but it's coming in marginally higher than expectations. On the total income side, it's about 87.6. That's the number that's on the Bloomberg screen at this point. But let's wait and watch for some more clarity on HDFC numbers. That's HDFC for you. That stock is moving as we speak at 1704. Ramnath, if I can just get back to you, just one question. So, if as a fund house, what is your view on PSU banks? Is there juice left? Would you be participating in this? And the other point is also we've seen a gush of liquidity come into mutual funds, right, over the last 6-7 months. How are you guys dealing with this cash?
Yeah. See, the thing is, as I was answering the earlier questions, the point, what we think is that given the stellar rally of last week, where you had almost the entire annual return happen on a single day, you're going to see a period of consolidation. But still, if you are a holder for the next 2 years, 3 years, I think there is money to be made in some of the better PSU banks. That's our view, because we are at the start of the next credit cycle. So they are well placed to basically make money for investors. Now, coming to the question of the gush of liquidity, see what is happening is that, and in the recent months, there is an interesting trend that's happening in the markets. Some of the beaten down sectors or the sectors which are not performing for a period of time, over the last 5 years, 10 years, they are seeing signs of revival in terms of performance, and I think that's where the trend is going to move. Because the business fundamentals of some of these businesses is turning favorable. Valuations are attractive, and given the fact that some of the well-run stories or the well-discovered stories are at reasonably high valuations, money is going to find its way to some of the sectors and stocks, where there is potential for better growth happening over the next few years.
Ramnath, just one question on valuation. So I think after that rally that we saw, most of the public sector banks are now trading at close to one-time book. As there is equity dilution, once this recap actually happens, some of those valuations will start to look even loftier. What over a cycle is a reasonable valuation you think for PSU banks? And if you want to split it into large PSUs and mid-sized PSUs, that would be useful for us to know.
Yeah. See, the thing is, if you look at from a theoretical concept, it depends on the ROE that a bank delivers over a cycle, and if you see some of the well-run or the large PSU banks over a cycle, they have done reasonably well, and so if the NPLs do come off, as what we have seen in say 2004 to 2008, there was a fairly sharp reduction, which I don't think is likely to repeat, at the same extent or the same pace at which happened. You've got reasonable kind of upside to happen even from here. One-time book can probably go another 30-40% from here.
All right, Ramnath, thanks so much for that. That's an interesting view coming in on the PSU bank side, the implications of the recap. I think we're going back to HDFC Bank numbers. Shraddha is standing by with the details. We've got the stock reacting relatively positive. Shraddha, what do you have?
Well, if you look at the total income, it has come in at 8,761 crores versus about 8,100. So revenue from operations have grown by about 7.7%. Even if you look at the calculated net interest income number, that this is not what they've given, but this is what we've calculated, 3,151 versus 2,818. So a marginal uptick as far as that is concerned. Even if you look at the provisions, they have come in at about 95 crores versus a number of 85 crores in the previous quarter. So
increased by 23%. This is during the 6-month period. So approvals up 27%, disbursements up 23% in the retail category. Loan book on an AUM basis as of 30th September stood at 3,68,217 crores of rupees, which represents an increase of 18% over the previous year. If you were to look at the individual loan book growth on AUM basis, the growth was 16%. and the non-individual loan book growth on an AUM basis was 24%. And the overall loan book growth on an AUM basis, as I said earlier, was 18%. During the quarter, we sold loans aggregating to 3,530 crores. As you know, we do not retain all the loans that we originate. We also sell down loans. Some of these loans we sell down are to HDFC Bank. Sometimes we sell loans to other banks if we get an attractive offer from them. So in this quarter, we've sold loans aggregating to 3,530 crores, of which 3,165 crores was sold to HDFC Bank and 365 crores was sold to other banks, where we get a much higher spread. During the last 12 months, that is from October 2016 to September 2017, we have in the aggregate sold loans aggregating to 15,433 crores, of which, as I said earlier, 3,530 crores was in this quarter. On 30th of September, we had a total of 43,435 crore rupees worth of loans which have been sold by us and which are still outstanding. So we continue to earn a weighted average return of 1.27% on these loans. So we earn income not just on loans which are appearing in the balance sheet, we also earn income on loans which have been sold by us, which is this 43,435 crores. If we had not sold any loans in the last 12 months, then the growth in the loan book would have been 23%. The growth in the individual loan book would also coincidentally have been a similar 23%. If you were to look at the incremental growth during the quarter and during the 6-month period into different categories of loans, individual loans, corporate loans, construction finance, and lease rental discounting, you would see that in the 6-month period, individual loans constitute 70% of the growth, 70. Lease rental discounting loans constitute 15% of the growth, and construction finance constitutes another 15% of the growth. If you were to look at only this quarter, the second quarter of the year, which is the period from July to September, then 79% of the growth in the loan book was on individual loans, 11% was on construction finance, and 10% was on lease rental discounting loans. And this compares to the first quarter when it was 64% individual loans and 18% construction finance and 18% lease rental discounting. If you were to look at the breakdown of the loans outstanding as of 30th of September between the different categories of loans, individual loans constitute 72%, construction finance constitutes 13% of the loan book, lease rental discounting constitutes 8% of the total book, and corporate loans constitute 7% of the total book. This is of the book as a whole as of 30th of September. As you know, HDFC has a lot of investments in subsidiaries and in associate companies. So out of these different companies, there are only 2 companies that are currently listed. HDFC Life is, as you know, in the process of doing an IPO and will, by the time we come to the next quarter results, be a listed company. But currently there are only 2 companies. One is HDFC Bank and the other is Group Finance. The unrecognized profits on our listed investments, which is the difference between the market price of these shares and the carrying cost, is 1,03,068 crores. So we carry an unrecognized profit of more than 1 lakh crores just on listed investments, in addition to which we have unrecognized profits on our unlisted investments. Based on this unrecognized profit, if we were to recalculate the book value per share, then the adjusted book value after taking into account the unrealized gain would be 902 rupees a share. Non-performing loans stood at 1.14%, 1.14% compared to 1.12% in June, so broadly the same. If we were to look at the breakdown of the non-performing loans between individuals and non-individuals, individual non-performing loans stood at 0.65%, and which was exactly what it was in June, and non-individual non-performing loans stood at 2.18% in September. On 30th of September, we carry a total provision, this is a balance sheet provision, of 3,235 crores. Now against this true 3,235 crores, from a regulatory standpoint, we are required to carry a provision of only 2,500 crores. That 2,500 crores can be broken up into two categories. One is provision created for standard assets, which is a regulatory requirement where the National Housing Bank, for example, says that for every individual loan that we do, we have to provide 25 basis points as provisioning. And for non-individual loans, depending on the kind of loan, there is a higher amount of standard asset provisioning we need to do. So the total quantum of standard asset provisioning we needed to carry from a regulatory perspective stood at 1,446 crores on 30th of September. Again, from a regulatory standpoint, from an NPA perspective, we have to carry a total provisioning of 1,054 crores. So regulatory provision required, if you add up the two, is 2,500 crores, whereas the actual provision we are carrying is as much as 3,235 crores. So in reality, we are carrying a provision of 735 crores in excess of what is required by regulation. And as you know, historically, we've always had a practice that whenever we make these large profits on selling on any of our investments in our subsidiaries, a proportion of those profits, historically we've done 30% of those profits every time, a proportion of those profits, which in the past, as I said, has been 30%, we transfer into a provision account. So we create a buffer in the provision, which can then be taken care of in future if there is ever the unlikely event of anything becoming non-performing loan. So when we come to the December quarter, out of the profits that we will realize on the listing of the life insurance company, a proportion of those profits we will put into a special provisioning. Net interest income. Now, net interest income can be calculated in different ways. So I will give you the current year figure and the previous year figure, so there is a base for you to compare. Based on just the interest calculation, which is interest income minus interest expenses, the net interest income for the quarter stood at 2,612 crores compared to 2,299 crores in the previous year, giving an increase of 14%. If you were to look at the 6-month period, net interest income stood at 5,199 crores compared to 4,530 crores in the previous year, giving an increase of 15%. Net interest margin has been stable right through. Net interest margin in June was 3.9%, and similarly in September, net interest margin continues to stand at 3.9%. Spreads, if you were to look at 6-month spreads and the first quarter spreads, there is no difference. Spreads as of 30th of September stood at 2.29%. Similarly, spreads in the first quarter were also 2.29%. In September, the individual spread stood at 1.92% and the non-individual spread stood at 3.07%. And this is 1 basis points higher than what it was in September of last year when spread stood at 2.28%. Dividend income for the quarter stood at 536 crores compared to 456 crores in the second quarter of last year. And profit on sale of investments during the quarter stood at 65 crores. So after taking into account the dividend income and the profit on sale of investments, the pre-tax profit, the profit before tax for the quarter stood at 2,907 crores compared to 2,558 crores in the previous year, giving an increase of 14%. So profit before tax for the quarter went up by 14%. 6 monthly figures are not comparable. Simply because in the first quarter of last year, we had a profit of 922 crores on sale of the HDFC Ergo shares. So to that extent, the profits are not comparable, but the profit before tax for a 6-month period in the current year stood at 5,266 crores. After providing 806 crores for taxation compared to 731 crores in the previous year, and this 806 crores includes the deferred tax liability on our special reserve. The profit after tax after considering the tax provision stood at 2,101 crores for the quarter compared to 1,827 crores in the previous year, giving an increase of 15%. So the post-tax profit for the quarter was up by 15%. 6 monthly period, again not comparable because of the Ergo profits in the previous year. 6 monthly profit in the current year stood at 3,657 crores compared to 3,697 crores in the previous year. But again, as I said earlier, these are not comparable figures. Effective tax rate for the 6-month period stood at 27.7%. I'm sorry, 27.7% for the quarter and 30.6% for the 6-month period. Consolidated profits, which is after taking into account our share of profits of HDFC Bank, HDFC Life, HDFC Asset Management, HDFC Ergo and all the other subsidiaries, for the quarter stood at 2,869 crores compared to 2,446 crores in the previous year's second quarter, giving an increase of 17%. And subsidiaries now account for 35% of the consolidated profit as compared to a little under 30% in the previous year. So this is just the broad highlights of the results.
All right, so that was Keki Mistry, but again, I'll just repeat the key numbers for the benefit of the viewers. Net interest income has come in at 2,612 crores versus a number of 2,300 crores, so a growth of 14% there. Net profit has come in slightly higher than Bloomberg estimates, so a growth of 15% at 2,100 crores versus 1,990 crores that the street was working with. Provisions are relatively stable at 95 crores versus a number of 85 crores in the previous quarter. Interest spreads have also remained steady at 2.29% versus the June ended quarter. As far as the gross NPA number is concerned, it came in at 1.14% versus a number of 1.12% in the previous quarter. A small marginal bump up is there as far as the gross NPA number for the non-individual segment is concerned. It has gone up from 2.09% to 2.18%. So broadly, but the numbers do seem in line with what analysts were working with. The loan growth also on an AUM basis has come in at about 18%, and the management of course did say that the incremental growth as much as 79% has come from individual loan segments itself. So broadly, our numbers seem to be pretty steady and in line with the previous trends that we have seen.
All right, Shraddha, we'll leave it there. Thank you so much indeed for joining us. So, we'll step in a short break. On the other side, we're going to be talking about HDFC. We'll also talk about more about markets. And Hans Györty, independent research analyst, will talk about what foreign investors are thinking about India. That's coming up on the other side.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Watch us live in conversation with Ramdev Agrawal on the power of quality.
Quality of business and quality of management, because that's the 90%, 95% of the investing. Quality is the starting point. If you don't have quality, it's not taking up the journey at all.
Watch us live in conversation with Ramdev Agrawal on 31st October at 11 a.m. as we discuss the power of quality in the process of investing. Send in your queries using the hashtag AskBQ to BloombergQuint.com. Write to us now. Use the word Ramdev in all your queries.
Thanks for joining us on Power Lunch. We're going to be talking about the markets and how foreign investors are looking at India at this point. Hans Györty, independent consultant, joins us from our studios in Singapore. Hans, thank you so much indeed for joining us. How do you think the Indian market is positioned at this point in time? The Sensex in dollar terms is up nearly 30% so far this year. And we have seen significant interest by foreign investors, although they've been selling over the last several months. Do you see the tide turning?
Well, I think the tide has turned in favor of emerging markets about 1.5 years ago, and of course India is very much part of that. In our view, India is a key element in the emerging market universe. First of all, in India you have the fastest growing economy in the world. Secondly, you have very favorable demographics, and thirdly, you have a government which is business friendly and reform minded, and that's all we need to know. I mean, we're invested in India for the next 3 to 5 years or even longer. And it's still a very interesting investment story and remains that way despite seemingly high valuations.
Hans, on the macro front, there are conflicting, I guess, data points, conflicting stories playing out as well. One is that we're not entirely sure how growth will play out from here, most expected to actually rebound. But on the other hand, higher oil prices could prove to be a negative for India's macros. Do any of those play into your mind and your investment decision into India?
Well, I would think we had a bit of a growth slowdown. We would expect that to pick up again. One of the key elements, as you say, is the oil price. And as of late, we have always been a bit, neutral on the oil over the past few months. In fact, oil has been locked into a trading range. If you're talking about WTI, for instance, has been in a trading range between 42 and 55, pretty much over the past 18 months. Now we're getting to the upper end of that trading range, and some of the fundamentals seem to have changed a little bit. We have less production coming out of the United States, or at least a plateauing of production from the oil shale producers in the US. And at the same time, you have an OPEC agreement which seems to be holding and seems to be extended beyond March 2018. So that provides a backdrop for oil that is slightly more constructive than what we have been over the past, what we have seen over the past 12 months. So we would turn bullish on oil if oil was able to break out above the 55 level. Again, I'm talking about the WTI. Brent is already at 60. So 55 on the WTI or higher would make us look a little bit more bullish for the next few months.
Just about valuations once again, Hans. Many investors that we speak to believe, and they say that many stocks across the board in India have run too fast. What's your own reading? Do you think there are still pockets of the market that are still attractive from a price standpoint?
I would think so. We just talked about oil prices. And have been low for a long time. I think the energy sector looks attractive. We think financials look attractive. But again, valuations, you can argue whether they're high or low or whatever. I mean, we had valuations in India always a little bit on the high side compared to the rest of the emerging markets universe. You have high valuations in the United States, and yet the markets make new highs almost on a daily basis. So valuations, yes, they matter in the long run, but they're usually a very poor trading tool, so markets can remain overvalued for a very, very long time.
Hans, how does India compare to some of its Asian peers, whether it's Indonesia, South Korea, some of the other sort of typical destinations for foreign money? How does India compare to some of those?
Well, India is clearly a domestic story for global investors, whereas economies like Taiwan or Korea clearly tie into the expansion of interregional trade, exports, global supply chain. We have seen an increase in exports, a considerable increase actually. So, these markets are attractive for various reasons. We like Korea, we like Taiwan, we like India, again, for different reasons. But overall, the tide has turned in favor of emerging markets. I mean, emerging markets underperformed for about 3 or 4 years since 2011 because the growth differential between developed and emerging economies was in favor of developed economies, and that has now flipped. And once you have growth differentials in favor of emerging markets, they tend to outperform, not just for a few months, but for a number of years. And that's how we are positioned here. We like emerging markets in the context of a global investment.
So given what you're saying, how do you then feel about Indian bonds? We've seen bonds battered over the last couple of weeks on the back of government announcement as well. And there is expectation in the market that there will be fresh supply coming in. And, do you expect to be bearish on bonds while you're bullish on stocks?
Well, probably more bullish on stocks than on bonds. Again, we had the bank bailout, and I think that we have a lot of issuance of bonds as a result there. But again, you have decent yields. And if you compare internationally across the board, Indian bonds are still attractive, but we remain more bullish on equities than on bonds.
All right, Hans, thanks so much for joining us. Appreciate you taking the time to speak on the emerging market flows picture and how India stacks up. That's the India view. Of course, the one joker in the back is what happens in the US. We know that the US Fed is going to start tightening, but could that take a turn if there is a new Fed chief in play? Donald Trump took to social media over the weekend saying that he has a clear candidate in mind to head the US Federal Reserve, and Janet Yellen may be on her way out. That seems to be what the markets are speculating. Who would come in, and if it's Jerome Powell, which seems to be the consensus candidate out there, the consensus of the markets that is, would the Fed's policy actually change? We had Bloomberg News have a conversation on this very subject with Jefferies chief European economist David Owen. Let's hear out a bit of that conversation.
Whoever is going to be Fed chair next year, will be raising rates further, and obviously you've got this whole reinvestment point that the portfolio is now running off, and how much upward pressure will that put on US yields? And the other thing in 2018 is as the ECB steps back somewhat from QE, do we see less flow out of the Eurozone into the US Treasury market? And I think that's also something which the market itself hasn't really focused enough attention on.
How much continuity does Trump want to attain? Janet Yellen and Powell have never dissented. Our latest flurry. And by the way, the betting on Powell is 81%. Yeah. Now, what they know, who knows? Right. Who knows? I mean, it's almost like a reality TV show.
I wonder if he knows. Yes. And we don't know.
We don't know. And I suppose the theme is this. Whoever we get, i.e. Powell, possibly Yellen, leave Taylor out for the moment because it looks as if Powell's the front runner. It's going to be continuity. It's going to be people who've never dissented. It's just going to be perhaps more of the same, more likely more of the same.
Yeah, absolutely. And I think what obviously Donald Trump would love to see is a very strong US economy. So, he doesn't want anyone that's going to, tighten policy probably too much. But, if we get into a situation where the US is growing robustly and the Fed's raising rates, that's absolutely fine. And obviously he needs to push through on the fiscal side, some, meaningful tax reforms. But at the end of the day, the Fed is well on its way to normalising policy in the US.
Was the idea of a hawk, I mean, we can't rule out the idea that a hawk is appointed, but there have been there's been so much reporting and so much said about this story, but just looking at this from an economist's perspective and knowing, as you say, what President Trump wants out of the US economy, which is a robust growth story, over 3%, was the idea of a hawk, was that hard to justify for you?
Well, not really. I mean, at the end of the day, if you've got loose fiscal and you've got some tight money, monetary policy, then, I can see that somewhat rationale for that. And we don't know, exactly where, interest rates should be trading over the next 2 years. So you can imagine a scenario where rates actually in the US go up more than the market's currently pricing in, and they could go up more than the market's pricing here in the UK as well on a 2-year view.
That's a bit from Jefferies, but back home, SpiceJet does not want to be bound by airports. The budget air carrier, which only recently placed a $22 billion order with Boeing, is now looking to buy amphibious planes, opening up the possibility of flying to areas with adjoining water bodies. Bloomberg News' PR Sanjay is here to tell us more about the airline's plans. Sanjay, you don't need an airport anymore.
That's true. So if you could, listen to Ajay Singh, the chairman and the promoter of SpiceJet, he's very clearly saying that there's shortage of runways. So Harsha, if you could recall, the earlier decision to go for Bombardier planes, which is smaller planes. At that point of time, SpiceJet was clearly saying that there's only nearly 100 airports which could handle a 320 planes or a Boeing 737s. So we are really in short of runways which can handle a wide body or medium planes. So in this case, that's the reason they opted for a smaller planes which can fly into a smaller runways, which is Bombardiers. Now, Ajay Singh is going up a step further where they can land in water as well. Of course, many entrepreneurs have tried out this and failed so far. So, clearly he's trying to connect trying to put many airports under the aviation map, which was also the dream of Narendra Modi to connect. Udan scheme is, what he's trying to do is like giving more power or more wings to the Udan scheme.
Okay, so these are these planes have already been ordered. This is a Japanese company, I understand.
Yep. So it is, it's in the initial stage. They're talking to Japanese company, and if you could remember, Nitin Gadkari was also saying that one of the Japanese companies and other two nations are also interested in selling these kind of planes. But a lot of hurdles ahead because you need regulatory approvals, you need DGC approval, and of course, you will also face some problems with the environmentalists because they may not agree to this kind of facts. So, but the key moot point here is, so for example, a small, a tourist destination or a pilgrimage in a destination can be connected with these kind of planes, but viability is going to be a key issue over here. Fuel, and for SpiceJet now you have Boeing planes and you have Bombardiers, and now you have amphibious plane. And if at all they go for a wide body planes for Airbus, that which would mean 4 sets of planes. So it's going to be a huge engineering task for SpiceJet, barring other hurdles ahead.
Small question, Sanjay. Does this happen anywhere else in the world? I'm sorry. This is from somebody who knows nothing about aviation, but do people actually land on water all the time? Like as commercial planes? I know that you can land if there is, an emergency, etc. But commercial planes, do they land on water?
Ideally, it can happen. It can happen in a country like India, because you have, you can, so if you see, in transport department of the nation is trying to connect inland waterways, coastal ways, ports, etc., etc. So they're trying to do a Sagarmala project. Now it's a Bharatmala. This could be a new mala for aviation.
Okay. Sanjay, thanks so much. That's an interesting story. Go to BloombergQuint.com and you can read more details on it. Staying with news back home, and not so happy or interesting news. Actually, this is the coal supply problem, which comes up every now and then at India's thermal power plants, where another such shortage seems to have sent power prices higher. The trend actually started in August, with factories starting to ramp up their production to make up for the shortfall in the run-up to GST. They rose even further when coal stocks started to fall sharply at close to 30 of the country's power plants. The world's largest miner, Coal India, which supplies 70% of the coal to these power plants, however, says that the problem is not so much at their end. They have the inventories and the stocks of coal, but some of these power plants have been running at critically low inventory levels. Hear out what the management had to say to Bloomberg Quint earlier today.
Still, we have more than 29 million ton of coal in our mines, and even power plants have their stock of more than 5-6 days. So if you take the coal lying at mine pit heads and power plant pit heads, it's sufficient for more than 20-25 days as such at the level of present consumption by the power plants. So it's not the question of coal availability in our country, it's the question of moving the coal available at mine heads to power plant heads.
That's the management of Coal India. But here's an interesting one. Jeff Bezos overtook Bill Gates as the richest person in the world. That's according to the Bloomberg Billionaires Index. The net worth of the founder of Amazon stood at $93.8 billion at the end of Friday, ahead of Microsoft's co-founders' $88.7 billion. Gates held the top spot since May 2013. Now, Bezos' wealth increased by $10.5 billion on Friday, following the release of Amazon's third quarter numbers that sparked a stock rally. The third on that list, of course, is Warren Buffett at $81 billion. The Amazon stock went up by nearly 47% so far this year, so Bezos is richer by about $28.5 billion in 2017 so far. And it's been a great year for billionaires. 500 billionaires era their wealth has gone up by nearly $834 billion. And take a look at this chart. And this is an interesting one. You compare the wealth of Jeff Bezos versus Bill Gates. The one in blue is Bezos and Bill Gates' wealth is in white. In July 27th of July, he actually overtook Bill Gates briefly intraday. That's when the stock of Amazon moved up. But by the end of the trading session, Gates was back at the number one slot. But today it's been, or rather on Friday, it's been decisive. Amazon's numbers have been extremely strong, and therefore the stock went up. And Jeff Bezos' net worth on the 27th of October alone, just in one day, went up by $10.5 billion. In 2017, he's grown richer by $28.5 billion. That's Jeff Bezos for you. Now, the headline really is Amazon Prime.
I wonder if these guys have markers on their portfolio trackers. I'm up, no, you're up. It'll be fun to know if they actually do that.
I'm guessing they do, but you can catch a lot more of that on Bloomberg Billionaires. There's some more numbers coming in. UPL on your screen. That's net profit is about 237. That looks like it's marginally higher. It's significantly higher than what was expected. That stock is marginally up in trade today.
All right, I think that's the time we have on lunch. Thanks so much for watching. Have a good afternoon.